Hi, everyone. Welcome to Analyze Your Trade, episode number 12 for November 21st, 2017. My name is David Kosmeter. I'm the creator of Timing Research, and tonight we will be discussing your trade ideas. Over the last couple of days, we've had over 50 people submit up to 5 symbols, and I have put together the list, which you should be seeing on your screen right now while I'm talking. So we're going to try to get through as many of those as we can. I developed the show with Dean Jenkins of FollowMeTrades.com, and he's here to moderate tonight, so I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David. It's good to be here. Show number 12 already, huh? Wow, it's hard to believe. But I always look forward to doing this. We got a good panel. We got some smart people, some good traders. We've got John Thomas, Roy Swanson, hopefully trying to log in. And we've got Jim Kenney. So I'm looking forward to it. And I'm going to lean on these guys to do the bulk of the talking because I have a terrible cold. I feel like I'm dying. So I'll do my best here, but carry me along here, guys, if you would. But let's go ahead and kick it off with each of the panelists just doing a short 1-2 minute introduction of yourself. You know, what you got going on, what your focus is, what your service is. And we will start that with the mad hedge fund trader himself, John.
Hey, how you doing there? This is John Thomas, the mad hedge fund trader, broadcasting to you live from Lake Tahoe, Nevada. I am a 50-year trading veteran, covering all asset classes, long and short. You can find me at madhedgefundtrader.com, and we are up 58% in the past 12 months with our Trade Alert service. So look forward to working with some of you in the future.
All right. There we have the mad hedge fund trader himself. Thanks for the introduction, John. It's good to be back here with you. I always enjoy it. Roy, do we got audio? Are you here?
Yeah, do you hear me?
Yeah, there you go. Awesome.
Hey, I founded a site called Steady Trader. We believe in small, steady trades. We teach a method of trend trading. Basically, our mantra is get in and get out within a few days, and take your money while it's real before the market changes its mind.
All right. I don't think I've been on with you before, so I'm looking forward to it. Didn't know you.
A lot of guitars on this show, isn't it?
Yeah, I see.
Maybe we can have a guitar boogie at the end of the show, something like that.
Guitars, Cadillacs, and whatever.
Yeah.
All right, and we've got Jim from Option Professor. Jim, if you go ahead and introduce yourself.
Yeah, I'm Jim Kenney. I provide the content over there at the Option Professor for the 7 DVDs they've put together. And basically, it's educational from the standpoint of all the moving parts that are in the options, using them for hedging purposes, using them for limited risk spec, and also using them for cash flow creators. So lots to learn in the option area. And the Option Professor has the DVDs to kind of clarify some of the confusion.
Okay, good to have you. I know we've been on the show several times together, Jim.
Mm-hmm.
I look forward to hearing your comments here. Well, let's go ahead and rock this thing. People tuned in here to hear about stock trades. They want to hear our analysis on these symbols. So let's just see how many we can get through. And the first one up is Google, G-O-O-G-L. So if you don't have an opinion or you hate it, you know, give it a thumbs up, give it a thumbs down, or elaborate if there's some reason there. But if there's nothing there, move on. So, John, what do you think about Google?
I think there's a double in it over the next 5 years. I love it. The thing with Google is almost all the FANGs are now trading as a single stock over the long term. So you can almost pick your poison. The variation between stocks will differ on a week-to-week basis, but Google's taking over the world along with a couple other companies, and I know Sergey Brin from the early days, and it's an outstanding company. However, it is extremely overbought. So, if you want to get in for the first time, buy a third now, buy a third later. It's a classic scale in on the long side over time, average up or average down type situation.
Okay, so you love it, but you wouldn't buy it. Is that what I heard?
Yeah, wait for a pullback. I mean, this thing reliably gives you 15% pullbacks. We're at a peak now, so I'm hoping that a bunch of tax loss selling hits the entire market in January as people take advantage of the lower tax rates, and the biggest falls will be had by the FANGs because they've had the biggest gains this year.
Okay, we got a theory. Nice. Roy, how do you like alphabet soup here?
Well, again, I only look at short-term trades, holding them for maybe 1 to 5 days tops. I don't see anything in Google in that timeline. I agree. Long-term, Google's great. You want to park your money. Hey, it's like Fort Knox, but in any event, not in the next week.
Yeah, if anything, short-term, Google's a short, but short at your peril in this market. It's just a massive liquidity-driven market. Shorts are getting destroyed.
Yeah, just when you think it should go down, bam, goes up. Been a lot of bear traps. Been a lot of bear traps.
I can't remember seeing this many false breakdowns in the market over such a short period of time. We've essentially had 3 in the past month. Last Wednesday being one of them. So it's there's no two-way market here. It's basically bid only, or no bid, but no sellers.
But there's a bit of a rabbit hole, whatever you want to call it. But I think it's worth initiating positions on each of those, because when it does go down, it's going to be good. Right?
Yeah.
Yeah, there's a big gap around 1,000 or so that it jumped up out of. So if the news changed at all, it could have some attraction towards that number a little bit. But, $2 billion coming in every day on the ETFs. The money's just flowing in here like a river. And obviously Google's going to grab some of that river.
Yeah, that's absolutely right.
And that is the mark of the top historically, is it not?
Right, but markets can top for years. I watched Tokyo top for 3 years from 86 to 89. So just because it's topping doesn't mean it's the end. It probably is topping, but it's part of a multi-year topping process.
And you probably am sensing some bearish body language here from me, but I'm actually long more than I'm short, so I'm just ready. I'm just ready.
Yeah.
Jim, did you have any other thoughts on Google? I know you added a couple there in the
Yeah,
dialogue.
no, just the money flow is just coming into this market like a wild man. And I think in the last week, basis the transports and the Russell, somebody's either leaked out that tax reform's getting done, or it's the realization that earnings are going to be up in the fourth quarter and the first 2 quarters of next year, and people are just saying, "Get me in, get me all the way in." Now that doesn't mean it has to keep going, but that's what's going on right now.
It's no secret. I saw it on Twitter. Some guy, I forget who it was, said it's going to happen.
Well, there you go.
Well, I mean, they bought the Russell up about 5% in a week, so I don't think that was just done on mom and pop lunch bucket buying. They did a pretty good move on that Russell in the last week.
They sure did.
Yep. My take on Google, I'm a swing trader. I use Elliott Wave, and I try to catch the initial impulsive move. I try to catch the correction or the continuation of the trend. And this is a mature trend, so it's impressive. It's great. Probably go on to new highs, but there's no trade for me on Google. I look, if I hate anything as a trader, it is chasing a trend. I want in earlier. I don't want to mess with it.
Yeah, right.
I mean, I catch legs, right? Impulsive legs of trends. And when you're in a mature leg like this, it's already extended. Who knows how far it'll go from here? And that's the problem. We don't know how far it'll go from here. So I like to use Fibonacci extensions, retracements, and be able to predict and get a reward to risk ratio on a trade. And for this, I just can't do it. So there's other better charts out there for me.
If you had to do some sell strategies, the gap right up around 1040 and then the 52-week high at 1048 might be a couple of lines in the sand, but those are kind of tough lines to work with. But those are a couple of lines you might use. The gap down there about a week or two ago, and then that 52-week high is still intact. For how long, we don't know.
Okay, hey, let's keep it moving, keep it interesting. So the next up symbol up here is Momo. And that is Momo Inc. So I've got my chart up here, but let's roll back through the batting order. John, what do you think about Momo?
Again, another one of these vastly overextended stocks. Only up 400% in 18 months. Was up 600%. It's looks kind of like Square, except it's gone ballistic. Again, the question is, how much risk do you want to take on at this point? At a point where you should naturally be reducing risk. I don't know much about the company, but these charts are a dime a dozen these days. And, you don't get rich buying after the 600-point move. You do it before. So I'll pass on Momo. Besides, Momo looks like it's losing its Momo. It broke the 50-day moving average.
Yeah, I heard somebody say earlier this session about not chasing trends. Who?
Sounds like a very wise man to me.
Mm-hmm.
Roy, what do you got on Momo?
I agree. Looks like I think this trend is over. Again, I'm only looking at 1 week. This is not one that I would trade. It's
right, because you're very short-term.
Yeah,
focused.
and it's been up for a few days, but the trend is over, and I would wait on this one.
Yeah, and we're going to get to a point where we actually, for the folks watching, there is a segment of the show where we actually talk about what we do like, rather than dissing everything.
I liked a couple of these. I liked a couple of these, but not this one.
Yeah, Jim, where you at on Momo?
Yeah, I don't have any real thoughts on this. I think you guys have hit this one pretty hard. I don't have much to add beyond that.
So I see something interesting here. You see my chart. So we've got this big impulsive move. It went from under $10 to 45. That was awesome.
Mm-hmm.
Nice pullback. And I'm using a very simple, repeatable Elliott wave. So that was 3. We're in 4. Now it came up off this bottom. So I've got the Ichimoku cloud. That's the shaded area. And then I got this white line as the 200 moving average. And so I've projected if this thing can get a continuation, that's a big if. It's not proven yet. We got one move up off the bottom, and it's under the cloud, which is significant resistance, and it's under the 200. But if it can go, higher high, higher low, higher high, higher low, break the cloud, break the 200, then. So there's a triple if, then it's got a target above $50. But that is not a sure thing yet. It has to break and do it. And so far, still heading down. So I would not go long yet. But if it were to get up to about, call it $37 above this resistance, then I'd be interested. But not yet. So it's interesting. It's one to put on a watch list, pay attention to, but not yet. That's my take on it. Next up is Apple. How can you do a webinar on stocks without talking about Apple? And we've done it for a few weeks because we randomized the list, but here we are. So, John?
Yeah, another, long-term buy, short-term short. Our target for Apple is $200 in 2018, and we made that target 6 months ago, and we're almost there now. We've almost we could hit my 2018 forecast by the end of 2017 if this momentum keeps up. Huge beneficiary of tax cuts, huge beneficiary of repatriation. If the tax bill goes through, that frees up $260 billion, which Apple can use to buy its own stock. So kind of a no-brainer, but like everything else in the FANG world, very overbought on a short-term basis. The stock's essentially gone up 50% on a 20% growth in earnings this year.
Okay.
Normally, those are things you want to run a mile from, but this year you don't.
Because it's 2017, right?
That's right.
All right, Roy. What are you thinking about Apple?
I think Apple potentially, yes. I think it's starting. I think someone talked about getting in early. I think it's got a possibility for going up in the next week. And of course, we all forget that we have Thanksgiving, don't we? But if it were a normal week, I think it has a good potential to go up. I also, with my system, I always put a little target for the next day. In other words, I want to see this trend actually work tomorrow. So my number for tomorrow is 174.82. If it hits that, I would get in as soon as I can, and hopefully ride it up for 3 to 5 days, whatever.
All right. Yeah, good point about the holiday. A lot of institutional volume comes out during the holidays, and
that's right.
You can get a little different take with a little different complexion of the market with retail traders in control. So who knows? It could be something. Jim?
Yeah,
Apple?
if the end of the year here, if we're going to get window dressing, if they're going to get some tax reform going, if they're going to get another bull rush, you would think Apple would be on that train. And some people were talking about 191. If the stars started to line up and there was a real good push here with the seasonality of the year as well, seeing Apple going on a run is certainly not off the chart.
So just here's a quick, anybody here go drop $1,000 on an iPhone 10?
I'm waiting for the lines to abate in January. I'll get one.
You want one, but you're not willing to stand in line for it, right?
No, not really.
I'd rather use my thumb than have to wash my face to get into my phone. It's face recognition.
Yeah,
I think a lot of people will get it next year with that wage increase that's going to come out of the tax reform, right?
There we go. We go.
I think that's a 2026 wage increase, most likely.
Well, I got my eye on Motorola's next gig. I'm an Android guy. I have never owned an iPhone in my life, and I won't. But I'll buy the stock if there's a good setup. But it's a little mature for me right now. The trend is a little long in the tooth.
Oh, for sure.
So Tesla, semi-truck, Model 3 production hell. What do you guys think?
Well, I've been following the company since it was at $16.50. I bought 3 Teslas, totaled 2 of them. So I know the company fairly well. And I have to tell you, as much as I love the company, it's the world's most untradeable stock. It's also been a graveyard for short sellers from $16 onwards. So long term, expect this stock to go to 1,000 to 2,000, but expect 40% pullbacks at any time without warning, independent of the market, independent of the car industry, independent of everything. That's what makes it so tough. Having said that, if you can get it anywhere, around 240 to 280, which was the last major pullback area, I would consider that a gift. And the institutions will be lining up to buy it at that price. I was at the factory last week. They have Tesla 3 parts stacked to the ceiling in a 500,000 square foot factory, and the ceilings are 40 feet high. So I think they can make their 250,000 production target for next year. If it dips for whatever reason, loss of subsidies in the tax bill or whatever, I'd be going to buy that.
You know, the Dos Equis dude is not the most interesting man in the world. Elon Musk could be, though, right? He absolutely.
He was the model for Tony Stark in the Iron Man movies.
Ah, sounds good.
I mean, he just announced a new sports car, $250,000, 0 to 60 in 1.9 seconds, and it can fly short distances. Oh, and the range is 650 miles on one charge.
I saw that. You know, you talked about the short traders. You know, the Tesla shorts or the graveyard. We caught a 60-minute chart short back in July, and we caught that move. And well, that was just a lot of fun. But you're right; it's a volatile stock. But I'm out of turn. Look at me, Roy. What do you think about Tesla?
I think it's good to go if it hits 320, around 320, 321 tomorrow. If it moves up a little, grab it, and I think it'll keep going up for the next few days.
Yeah. If you put that chart back up, the best case scenario for this stock is that that's a double top, and we break to a newer low, takes us down to maybe 280. That's your sweet spot entry point. But 50-50 chance that happens, and but we could be one bad news announcement from getting to that 280 point. Got to the 290s a few weeks ago, and then bounced hard on the truck rollout.
Yeah. I subscribe to Seeking Alpha. It's great. You can type in a symbol, right, and then any articles that are written about that symbol, you get. My inbox gets flooded with Tesla articles, and if you think, Republican versus Democrat reporting is contentious, bull versus bear on Tesla, man, they are passionate. The people who write about the company, and there's a ton of them. They either love it or not.
Hey, I've been drinking the Kool-Aid for 8 years, and it's been working.
Yeah.
Made a fortune on the stock, and I love the cars.
Seems like a lot of people are going with the truck too, or at least going to take a few of them in to see how they work for a while.
Well, Walmart ordered 12.
And JB Hunt.
Yeah, and they haven't released the specs yet. But
come on.
If they can come anywhere close to a diesel engine, it'll just take over that whole industry, like they are with the gasoline engine market.
Right. As far as the stock price is concerned, a lot of people don't trust it with this rally until it blows out the 325 area. So I think if you're trying to fool around with Tesla, people are thinking above 325 might give you the green light on it. But like you say, a couple of bad stories, you can go back to that 275, 280 pretty fast.
In the short term, I think I'm with you. 325 is not a bad number. We are under the 200. We're under the Ichimoku cloud. There is a lot of, there's a lot of overhead. There's a lot of resistance. Yeah. So it's got to get some momentum to break through that. Not a great short setup, and I wouldn't be going long. So that's not a real tradable gig for me either. And I'm probably sounding like, is there any chart on the planet that you like, Dean? So that would be a good segue, because there are. We're about halfway through here, so let's do this round where we talk about our trades, our favorite trade that we actually do like, rather than being a bunch of negative nillies. What do you like, John? What are you in now? What are you going to go in?
Well, by nature, I like what everybody hates. So right now, that's financials. I think that with 4 Fed rate hikes next year and a big deregulation play, you've got to love the financials. And Goldman Sachs is the laggard in that whole sector. If you want to play it safe, go with JP Morgan, Citibank, Bank of America. I think the whole batch goes together. And, you know, Goldman's been building a bottom since March. We've been trading it from the long side with call spread since March, and almost every trade has made money. So we're going to keep running with Goldman from the long side. That's been a big winner for us.
All right. Financials with a focus on Goldman for the mad hedge fund trader. Roy, what do you like?
My favorite one on this list is the IWM, the Russell Fund.
You don't have to constrain yourself to the list. This is all skate, man. You pick whatever you like.
Well, looking at this fund list, I really liked it. May as well make the audience happy. So as long as it gets up to like 152, 153 tomorrow, I think that's going to be going up for the next week.
All right, long on the Russell ETF for Roy. Jim, what do you like?
Yeah, I was reading something from Goldman today. Their 2018 forecasts, and you know, if they get what they're looking for on the tax bill, GDP growth, and higher oil prices, they're looking for things to be pretty darn rosy next year. And I would imagine they plan on being in on it. And also the M&A activity because of dereg and the leverage lending laws being relaxed. These guys probably could make a pretty big hit in that area, and that might give them the tailwind next year. So I hate to not be controversial to John over there, but he may be onto something with that thing.
Also, they're really big in bond trading, and if bonds top out, they could make a lot of money on the trading side with increased volatility in a bond market. They're probably better positioned to catch that than anybody.
Yeah,
you look at the past quarters, the big drag has been on trading.
Yeah, exactly. And if people want to get out of the bond market in a large group, they can, you know, have a bid in there that gives them a pretty good margin.
And you need Goldman Sachs permission to get out now. There's not many players left in the bond market who can take on big size.
Right.
So, John, you were bullish on the financial sector, and you talked about Bank of America. I have a fondness for BAC because I bought it at $5 in 2009. I took it to 15, and here's the incredible thing: I was stressed out and freaking out the whole time, and that actually turned the corner for me to become a technical trader and actually develop a trading system so I could trade without being freaked out. I tripled, and I didn't know what to do. Every day I look at the chart, and so that was really one of the triggering events for me to nail down a trading system, and since then I've been
well, I'll one-up you on that. At $5, I bought deep out of the money call options on a Friday. Monday morning, Warren Buffett announces he's buying 10% of the company. And the call options rose 400% from the Friday close to the Monday opening. And that's probably the best single trade I've done in 10 years. So I also have fond memories of Bank of America, but it has run an awful lot already. That's why I'd rather play for the laggard.
Yeah, so I got warm fuzzies on that, but from before, but not today, not yet. It's again, I don't chase trends. So I'm showing here, you know, what I love more than anything, these, you know, the FANG stocks and all these marquee stocks and, you know, household names, that's great. But I love nothing more than to go find a stock that nobody's heard of and a great setup and a great high probability trade, great reward. And here it is. Here's this week's. It's IPHI, Infi Corporation. They're a semiconductor technology company. I love this chart pattern. This is a clear Elliott wave 5. So there's the big impulsive move up through last year, early this year, a perfect correction to a Fibonacci retracement zone, and now the continuation of the original trend. When we looked at Momo, I said, you know, if it qualifies, then it would be good. This qualifies. This is above the Ichimoku cloud. We got higher highs, higher lows. We got growing momentum. We're above the 200. we got into this 40.33. We're single-digit days into it. Today was a nice 5% pop. This thing's off to the races. We got a target Fibonacci extensions on about $54. Probably take 30 to 60 days to get there. We just go buy the calls out in the April calls and let them run deep in the money, high delta calls, and book a 200% profit on them in the spring. More like Jan Feb is when we'll be closing the trade. That's what we're looking at. Love it. IPHI. Sorry. That's my deal. I'll give you one more just for fun. See if we generate any discussion on this. Looking for a short on Gilead. So Gilead had a miserable 2015 and 16, retraced up into a Fibonacci retracement zone, heading back down. We got a nice target down below $50.
Yeah, I'll take the other side of that trade. Gilead has a mountain of cash.
Trigger on this is 70.93. If it gets down, we're short. Excuse me. I'm dying.
Yeah, I'll take the other side of that Gilead trade. It has a huge mountain of cash. They're ripe to take over another company. A takeover is what triggered that big move from 60 up to 85 over the summer. So there are better shorts around than that one.
All right. Well, we will compare notes later this year, early next year. We'll see how it goes. Not in it yet. It's got to get down to 70.93 for me to take it. But take it, I will, if it goes down there. Looks good to me. All right, back to the list. Lamb Research. Let's check this out. Pull the chart up here while I am. John, what do you...
LRCX. We recommended this the middle of 2016. It's gone absolutely ballistic. We're keeping people in. This is sort of like the twin stock with NVIDIA. NVIDIA designs the chips. Mm-hmm. Lamb Research makes the equipment to make the same chips. So, spectacular return, but probably is going to keep going up. Would I buy it here? No. It's one of our 10 baggers, stocks that we recommended, which we thought could increase tenfold from the 2016 bottom. And it's already almost done that.
Very nice. Nice call. Roy, what you got on Lamb?
I like it. This is my number 2 from this list. Definitely get in there. It's going to keep going up this week. It's got a few of my indicators triggering. I like it a lot.
All right. Got a little momentum going with it, huh?
Yep.
It almost
Jim?
like a Bitcoin chart.
Yeah, this is definitely got momentum. There's no doubt about it. And if the semiconductor space keeps going, I guess on a melt up, this is going to attract capital because momentum traders and growth guys, those are the ones making money out there.
Okay. I love the trend. Hats off to John, to your call back in 16 on that. I'm with you, though. Too late to get in now for me. I just don't chase trends. I just don't.
This is a sit back and smell the roses trade. If you're in it, great. Take your wife out to dinner or something, but don't chase it up here. Not a good risk reward at this level.
Dinner? Go buy her a Tesla if you got in back here.
She's already got one. Maybe trip to Hawaii. I don't know what works these days.
Right. Okay, next, Micron, more silicon. People are into silicon here. That's what we got on Micron. Well, it's the same chart, pretty much.
It is the same chart for the entire sector, no matter what you look at. They've all gone nuts. And this is the whole artificial intelligence story. This is all about AI, and they're getting a kicker from Bitcoin because Bitcoin is creating tremendous processor demand through their mining to create new Bitcoin. So they're catching part of the tulip action here.
Silicon is so hot that even Intel's going up, for crying out loud.
I know. Well, Intel was our laggard for the summer, and that was a huge win also. You know, we look, well, what? And Silicon hasn't moved yet. We found Intel in August, and that's been another giant winner for us.
I worked for Intel for 14 years. I joined in 93, doubled and split like clockwork until the dot-com bust. Made me, you know, we had stock options and stock purchase. Made me feel like I was a really good trader back then.
Yeah, I knew the chairman in the 90s, the guy who eventually died of prostate cancer.
Andy.
Yeah, Andy Grove. We were joint venture capital investors into a company that was developing a prostate cancer drug. And the drug eventually worked, but Andy died before they could get any results.
So I was working there during Andy's time, and what a great company! What a great experience.
He was a wonderful guy. Everybody loved him.
Great company. I learned so much there. I'm so glad I did it. But their stock languished for 15 years.
Yeah, it's got 15 years worth of catching up to do now.
So Micron, anyway. Wow. Roy, what are you thinking?
Not seeing it. Not in the next week anyway. Not for the near term.
Oh, for sure.
Right.
It just didn't
great
hit.
buy at $10. You know, you could have bought this for years at $10. People hated this stock, and it's just gone ballistic ever since.
Jim, you jumping in, or
I'm just we're looking at things that have already happened, and they may obviously continue to happen, and they're all part of the story of momentum and growth, and a lot of them have that little tailwind from the Bitcoin story. So if you're in them, obviously you enjoy the ride, and if you want to get in them, you might want to have some kind of a hedge on just in case this uniform bullish phenomenon tapers off. Doesn't look like it is going to, but sometimes it never does.
Yeah, and by the way, you're showing us the same chart over and over again. This is all classic 8th year of a bull market type stuff.
Right.
But you know what? What's the longest aged bull market in my lifetime? It's 15 years. Like I said before, these things can top for a really long time. 15 years was 1947 to 62. The U.S. railroad strike all the way up to the Cuban Missile Crisis. Stocks went up continuously for 15 years, and we're only 8 into this.
Somebody was saying in the 1986 Tax Act, when it passed, the S&P went up 40% afterwards. So when you get this kind of a tax situation going on, prices can get pretty strange out there.
Yeah, but we've already gone up 40% in 2 years with dividends.
Yeah. Some people say those
has happened.
Yeah, I was going to ask you, John, how's your feeling about what level is priced in on tax reform? Some people are telling me that we're not even close to pricing in tax reform, and then
I would say 50-50.
About half of it is. Yeah.
Yeah, I think that the bill will fail on the first vote in front of the Senate, which could be the end of next week. They either will fail or they won't put it up for a vote.
Right.
And they'll go back into negotiations when that happens. And that day, the market's down 500. That may be your next 3% correction. That correction you want to buy into, because they will hammer out something next year, although it will be greatly diluted, from the current form. A lot of the stuff in there is just delusional. Getting rid of the first in, first out rule for individual stock trading, but keeping it for corporations. I mean, that makes absolutely no sense at all.
Right.
Huge new subsidies for oil and gas. Of course, anybody who lives in New York, New Jersey, or Illinois, they get completely screwed.
Right.
They're looking at an average increase in taxes of $10,000 a year minimum.
Right.
So how you get this through a 51, 49 majority, which, could shrink to 50-50 on December 12th. It's too much of a reach.
Just the tri-state area and California alone, it's hard to believe they'd have any votes.
Yeah, don't forget us out here in LA.
That's what I was going to say. California and the tri-state area. How many people live in just those areas alone? You know.
Yeah, and the bill basically moves 4.5 trillion out of blue states and spends it in red states. So even if it passes, it'll get reversed in 2 or 3 years.
Yeah,
It'll never even be implemented. This is be the first tax bill to go in front of the Supreme Court too. There's going to be that afterwards. So my own personal hit is $100,000. You know, if it goes through.
Interesting stuff. You know, why they can't just put together the bill that's going to pass is beyond me. Next up here is Oracle, right? What do you think of a guy that's got a ancient Japanese castle? Larry Ellison, what an interesting guy. But in terms of a chart here, what do you think about Oracle, John?
Looks like he had some connection trouble. He disappeared
Uh-oh.
a second ago.
Oh no! Looks like he's trying to
logging back
log.
in.
John?
Yeah, you know, I got so upset I crashed my internet.
Well, that's what happens without net neutrality.
I'm sure you all said not very nice things about me while I was gone.
What do you think about Oracle?
You know, I have never really understood that sector. Plus, Larry Ellison is an asshole. He never donates to charities. So I don't know much about the company. That said, he owns $200 million worth of beachfront property next door to me. He's my neighbor. So that whole area, I think, is not really going anywhere. And I think Salesforce.com is eating their lunch.
All right. Roy, what do you got here?
Not seen it for the next few days. Again, it just didn't trigger any of the indicators I look at.
Okay. And Jim.
Yeah, consolidating is what it's doing right now after a very big run up, and the volume was kind of big in the last 50-day on a moving average basis. So a lot of money came running into this thing, and then
right back out.
Yeah, no follow through. So maybe the Salesforce story, which is definitely a increasing building up type story, it might be starting to weigh on them.
Yeah, Salesforce is taking over the world. They just built the tallest office building west of the Mississippi in San Francisco. Just totally dominates the skyline.
Yeah.
Saw that.
But this shows you how untradeable some of these stocks are. You have a one-day gap in June, and it's essentially gone nowhere for 6 months.
Right.
You know, unless you're a day trader, there's nothing for you there.
Yeah.
The Salesforce building is within a spitting distance of the condo tower that's falling down, right?
I think it's across the street. You know, it's listing at an inch a year. It's going to be the biggest insurance claim in the history of the insurance industry. It's like a $2 billion building. It may have to become a teardown.
Unbelievable. I saw that on 60 Minutes. That was nuts.
Oh, good luck trying to sell apartments there. You know, people who bought there, some of them have committed suicide. You know, the units have just been totally worthless.
They paid $2 to $4 million per unit.
I looked at one of the units myself. I looked at a penthouse, and you know, beautiful building, but it was overpriced in 2010 when the whole rest of the market was collapsing. They were asking $2 to $4 million then. So I passed.
And you can't give them away now that it's listed.
Yeah, the views are incredible from the top. Top on the way down.
Yeah, as long as you got a self-leveling chair, it's awesome.
Yeah, or a paraglider, a hang glider as an emergency device.
Yeah, I see a little breakdown starting in Oracle. It's got some major support areas, so I'm not interested in shorting it, but obviously it ran up. It's consolidating. It's down below the cloud. It's got the 200 under it. It's got some previous lows. So I wouldn't try and short it. Not yet.
You know, in this market, you don't have to chase marginal stocks like this. Just go buy some
Right.
more Apple. Screw
Yeah.
Oracle.
Yeah.
Yeah.
Go short on Gilead. That's a good setup right there.
Your sins will come back to visit you.
Mm-hmm.
Not every trade wins, but when they do, they do. Okay. Well, Square, we can take the label off. Looks just like Micron. Looks just like Lamb. And
Bitcoin.
And Bitcoin.
You know, what else is there to say?
I know.
Wow. Another 10% today. Hold on.
You just stand back in awe is what you do.
Mm-hmm.
And just go back and look at all your other positions. See if any of them look like that.
Right. Right.
Yeah.
By the way, this is one of the only IPOs, tech IPOs of the last 2 years that's worked. Almost all of them have been disasters, like GoPro, Blue Apron, Snap. This is a rare, IPO that left something on the table for the IPO investors.
Right.
But it's almost one of a kind. It's my newsletter today. The headline is "Don't let the unicorns bite you in the ass."
A lot of that has to do with Jack Dorsey too, right? The Square story.
No, Jack Dorsey. There's a different thing going on. Part of the reason Square has gone nuts is because they started accepting Bitcoin as a payment system.
Yeah, exactly right. Exactly right. Yeah. But I mean, he's also a celebrity CEO, and a lot of people jump onto that too, right?
Yeah, he's having a 350-foot boat built for himself while he's on his leave of absence. Oh, to be young and have money again.
Not bad.
Yeah.
Okay. Hey, we're making some headway through these symbols. So now we're going to do IWM, the Russell ETF, and I know Roy said he liked that. That was on his top list there. What do you? Where are you at on Russell, John?
We were short. We caught the entire 5% drop. We then sat on it, watched the entire profit go away, and now we're running a loss on the position. And we bought it as a hedge against the rest of our portfolio. So we're making money on everything else. We're long gold, we're short treasuries, and long some tech stocks. So, it was a hedge. We're losing money. I'll probably stop out of it tomorrow. Net, we're up on the month, but you still hate to lose money, even on your hedges.
Yeah, last I checked, we weren't here to be in the red, right? But some trades.
Proof that I'm not right all the time.
That happened to you too?
Yeah, occasionally you need a trade like this to humble you.
Okay, Roy, you said you liked it. You want to elaborate on what you like? Where you at on Russell? Uh-oh.
Roy?
You muted?
Yeah, Roy, I think you're muted.
I'm muted. Yeah, is that better?
Yeah, this is your moment.
So, again, coming from this perspective of the 1 week trend, this kicked on a few of my indicators. I like to use the RMO indicator and some of the wilder stuff, and just looking at pure order book volume. And I think this trend has legs for several more days.
All right. There it goes.
Again, I want to see it get up to about 152.5, 153 in the morning, and then I think I always like to see the trend keep going a little bit before I get it.
All right. Jim?
Yeah, I had mentioned the Russell in the beginning of the broadcast about how it jumped up about 5% in a week, and I got the feeling that between that and the transports, it might have been a situation where everyone's betting a tax reform gets done. But we've got a 9 handle on the VIX. We've got the Fed with a hike coming up in a little bit, and we've got tax reform if it hit a snag. I would think that all this buying into the Russell could reverse itself, but it's going to have one of those kind of things that I just mentioned, put a little water on this enthusiasm, because the entire planet seems to be making new highs, and the entire planet seems to be plowing money into equities. So that's a very, very tough river to swim against. But if they did get some news out there that would throw a little water on this fire, certainly the Russell could give up some of this big rally that it just had. But right now, there's no evidence of that right this second.
All right. So I took the Russell short as it broke out of this consolidation earlier this month. I think probably about the same time you did, John.
Yeah, right.
And so this blue line is where we went short, 148.58. And we just trailed our stop. I was trading it on a 60-minute chart. Trailed our stop down as it went down. It actually hit my target, within a whisker of my target. Fibonacci retracement went down, just about touched the target. We trailed our stop, went back up. So we got stopped for a small win as it broke the cloud. But yeah, we got a little win on that one. And looks like it's heading up into wave 5. Now, in fact, we can project this on this 60-minute chart, see if my target lines up with what Roy was saying. Again, a 60-minute, fairly short time frame, but that was a good wave 4 correction there. So we're looking at about 154 as a target, up to 161. Not too bad. And it looks good to go right now, actually, for a long on the Russell 60-minute chart. Not too bad.
Yeah, I'm with you on that.
Yeah, you know what got me on this is that they're fast forwarding the tax bill, trying to pass it before anyone has a chance to read it.
Right.
And that's what that has basically accelerated the mini correction and the bounce back. If they'd only delayed things 2 more weeks, I would have made it with that Russell short. But these are unusual times, and you get unusual stock movements as a result.
Well, that works so well on Obamacare, right? Just sign it. You can read it later.
Mm-hmm.
Well, I mean, the way they're managing this bill through Congress, it's an Obamacare repeat. Rush things through, no public hearings, try and pass it before they read it. Except now they have a much tighter margin than they did with Obamacare. So, but the market thinks otherwise, and the market is always right.
Right.
That's right. The efficient market, or at least.
Like I always say, you got to trade the market you have, not the one you want.
Yeah, that's like a. What was his name?
I think you said that once.
Yeah, trade the market. But that's actually a derivation of a quote from Bush Jr.'s Secretary of Defense.
Who?
What was his name? Secretary of Defense under.
You're talking about the guy who said.
Donald Rumsfeld.
You go to Rumsfeld. You go to war with
Donald Rumsfeld. We have known knowns and we have unknown knowns, and we have facts that are unknowable.
He said you go to war with the army you got, not the one you want.
Yeah, right.
Interesting thought. Okay, but yeah, we do trade the market we've got, not the one we want. Hey, I think we got time for one more symbol here, and it's GIS. Let's bring that thing up.
So
I haven't looked at it.
Came in from the History Channel, did it?
General Mills.
General Mills.
Yeah, it's like a General Motors chart. This has got old economy reeking all over it. Why someone would be interested in this, I have no idea. As much as I like Fruit Loops, there's just too many interesting things to do in the market than to bother with this one.
They want to get that dividend. That's what they want.
Well, that's always the case with these really bombed out value stocks. So, if you're happy with the dividend, great.
This is a good example of where the growth and the momentum is where the action is, and where the values or whatever you'd call this are lagging dramatically.
Yeah, boy, thank God I'm not a value trader. They're just getting killed this year.
Got to be embarrassing, right? The whole market goes up, right? You got this, can you imagine being the CEO of GE?
Well, better yet, notice how depressed the people on CNBC have been. They all own GE stock. They all got it in their pension funds when GE owns CNBC.
Yeah.
So all these CNBC guys, they're down 30% on the year in a market that's up, 20 with dividends. So,
so General Mills someday maybe we'll find the bottom, maybe.
Maybe they're part of the mergers and acquisition wave that could happen next year.
yeah, I think they're too big to take over, and this would be a horizontal merger, probably from Nestle.
Yeah.
All the food takeovers are coming from Europeans. So,
Right.
But we'll see if this AT&T deal has put a wet blanket on all M&A activity. AT&T is looking at a minimum $100 million in legal fees to fight this one out.
I like when Trump says he doesn't want to get involved in litigation, then he goes for 5 minutes giving his opinion on the thing.
Exactly. Yeah.
I found that amusing today.
Completely prejudices the government.
Exactly.
It makes it unwinnable.
Exactly.
I just couldn't help but bring up the GE chart here since we were.
I know that is the classic falling knife chart.
Wow. One of these days, but not yet.
What really panicked people was a few weeks ago, and the stock was at 24, and it came out that whenever Jeffrey Immelt traveled anywhere, he had a second jet follow him just in case the jet he was in had mechanical difficulties
from their turbines.
And when people heard that, they just thought, I'm out. I give up. I can't take anymore. And this is like one of the great capitulation moves of all time. And by the way, this is an L chart setting up. This thing's going to find some subterranean price level, bounce maybe 5%, and go flatline for years.
Yeah.
Yeah. There's no buying this catching knife.
No.
The hole they dug, their business mix is just so awful right now. It's almost an anti-stock market play.
I'll try and find one that you have an opinion about before we close.
Yeah. By the way, GE is the last of the original Dow stocks. Been in the Dow since 1901 for you history buffs.
And this puts a new spin on dogs of the Dow.
Yeah, well, this is a dog. This is the dog.
Well, hey, I think that takes us up to the end of our time. We managed to power through a good number of stuff here, so that was good.
You know who's celebrating with that GE chart? IBM. They were the worst Dow stock until GE came along.
It's nice to have somebody take a little of the spotlight off you, right? In terms of the negativity, right?
Yeah.
All right. Well, hey, it's been fun. It's been really fun being with you guys here on the show. We've got some good input on several symbols. You guys shared some great trades. And wow, we're out of time. So we're going to go ahead and turn it back over to you, David, to wrap it up. Thanks for having me back. Thanks everybody for being.
Want to do a quick closing statement for everyone?
Yeah, David.
Oh yeah.
Put my first slide up.
That's that. Yeah. Closing thoughts.
Okay.
Did I mention I got a terrible cold? I'm dying.
Go
for it, John.
Hedge fund trader. I have a daily newsletter, bi-weekly global strategy webinars, and a killer trade alert service that is up, high 50s on the year. We are Diary of a Mad Hedge Fund Trader. You can find me at www.madhedgefundtrader.com. And this is our performance after the hit we took on the Russell 2000. You can see we've been kind of flatlining on this chart the last couple of days. Our track record is daily audited independently and goes back 8 years. So you want 56% a year on your returns, go with Mad Hedge Fund Trader. If you want to make more than that, you can go with the other guys.
All right. Thank you, John. And Roy, just your closing thoughts.
Well, I just, if you're interested in short-term swing trading, getting in and out every week with a few picks, watching little trades add up, steadytrader.com. We've got a service called the Green Light System, and it's up around 46% this year, so we're not doing too bad.
All right, very good, very good. And Jim, the option professor.
Yeah, well, the markets around the world have been going nuts on the upside, and a lot of people are talking about the word melt up. And so it just seems like everyone is either in or want to get in or going to get in. And I would just say that it wouldn't kill you to learn a couple of hedging tactics just to have something underneath just in case things don't go exactly as the entire planet thinks it's going to go. And that would include, your married puts and your collar strategies and things along those lines. Just ways to possibly put some parameters around your equity from time to time so that if the world doesn't all end exactly as people are betting right now, you have some type of protection in there. So optionprofessor@gmail.com. You can get some details on that.
Okay, very good. And I'm Dean Jenkins, founder of followmetrades.com. And our results are posted on the homepage as well. We got a great year. We beat last year's record. And our results are audited by an external CPA firm as well. Full transparency, details of every trade we've taken year to date listed on the website. All right, now, David, we'll go ahead and wrap it up.
All right. Thanks, guys. Great show. Just want to remind everyone watching, be sure to hit the subscribe button on YouTube to get updates on future shows. And just want to thank my guests again for tonight. John Thomas of madhedgefundtrader.com, Roy Swanson of steadytrader.com. It's been a while since Roy was on, so it's great to have him back. And his first appearance on this new show. So thanks, Roy.
Good to be back.
Jim Kenney of optionprofessor.com and Dean Jenkins of followmetrades.com. Thanks, everyone.
Thanks, David.